Hey traders and investors, Serge Berger here. Today I want to have a look at the energy sector once again. We looked at it as we came into the fourth quarter, so at the beginning of October, where I said that there's a decent chance of us having a really good rally in the energy space in the fourth quarter. What has transpired since is basically a good rally in energy stocks so far, which continued on the first day of the month of November as market participants decided to sort of run after some of those things that had been lagging in the rally since late September. If you look at this chart here of the XLE ETF, which represents the S&P 500 energy sector, you can see technically we are working at quite a decent clip here. What we're doing here is we created a series of higher lows, which technically is a positive development. We've consolidated here for most of the past few weeks, and yesterday finally, with the beginning of the 1st of November, we had a nice rally break and also passed the 100-day moving average. So from my perspective, bearing any immediate term reversal, and mind you, the broader stock market, i.e. the S&P 500, is very overbought in the immediate term, but bearing any complete bearish reversal of the past few days of trading in the energy space, I think this is setting us up pretty well for a continuation into year end and possibly early 2016. Give you another couple examples though here first. Look at the S&P 500 compared to the energy sector. So we have the S&P in blue, we got the XLE, so the energy sector ETF, and the OIH oil services stocks in red respectively. Obviously big chasm. So one thing to consider doing here is to potentially trade what I would very simply call a pairs trade. Basically, one would go in and short the S&P 500, but buy the energy sector, so the XLE or the OIH, for sort of a coming together of this gap that you can see in this chart. So more of a mean reversion trade. Doesn't mean that so energy stocks don't have to go up for that to take place. They just have to fall less relative to the S&P 500. So I think that's a decent trade to consider looking at here for the coming weeks, probably the coming months. One last chart I want to show you guys, very important as well. If you look at the OIH, again, this is the oil services ETF, what it's done in relative terms. So this is what we call a ratio chart versus the S&P 500. You can see the ratio, so the relative weakness, if you will, has actually started to slow. We're starting to see a little bit of relative strength. We've broken that downtrend that's been in place for the past 15 months or so, starting to bottom out here and give us some bullish signs that the ratio, so the relative strength or relative weakness in that sense, is improving versus the broader stock market. And that, of course, would also help this chart that I showed you just a minute ago, where we saw the S&P 500 strongly diverging from the energy sector. So I hope this makes sense, guys. Please like the video, subscribe to the channel, and I'll see you in the next video.